Asian markets react to Wall Street's poor jobs report. In a dramatic turn of events, the global financial landscape is experiencing a rollercoaster ride, with Asian markets displaying a mixed bag of reactions following the steep decline on Wall Street, triggered by a disheartening US jobs report. This is the part most people miss: how interconnected the world's economies truly are, and how a single report can send shockwaves across continents. On Monday, global shares witnessed a rebound, with major European indices such as France's CAC 40, Germany's DAX, and Britain's FTSE 100, all showing signs of recovery, up by 0.8%, 1.0%, and 0.4% respectively. US shares too were poised for a comeback, with Dow futures and SP 500 futures indicating a 0.6% rise. But here's where it gets controversial. While these numbers suggest a temporary reprieve, they also highlight the underlying fragility of the global economy. Asian markets had already felt the tremors on Friday, reacting to President Donald Trump's late Thursday announcement of sweeping tariffs on imports from various US trading partners. The tariffs, set to take effect on Thursday, have added to the uncertainty that has been plaguing the global trade environment. Analysts suggest that the signs of economic distress in the US might prompt the Federal Reserve to reconsider its stance on interest rates, potentially leading to a cut. This move, while providing a short-term boost to the economy, could also risk stoking inflation, which has been stubbornly above the Fed's 2% target. In Asia, Tokyo's Nikkei 225 index, after a tumultuous start, managed to recover slightly, closing at 40,290.70, down 1.3%. The Hang Seng in Hong Kong and the Shanghai Composite Index showed resilience, climbing 0.9% and 0.7% respectively. South Korea's Kospi surged 0.9%, while Australia's SP/ASX 200 remained virtually unchanged. The weak US job growth figures, with only 73,000 jobs added in July, far below expectations, have deepened concerns about the health of the US economy. The Labour Department's revisions, which shaved off a staggering 258,000 jobs from May and June payrolls, have further fueled these worries. Trump's decision to dismiss the head of the government agency responsible for the monthly jobs figures has raised eyebrows, leading to speculation about potential interference in future data. This bold move has sparked a debate about the integrity of economic data and the role of politics in its dissemination. The weak hiring numbers have led investors to bet on a September interest rate cut by the Fed. The yield on the 10-year Treasury dropped significantly, from 4.39% to 4.21%, while the 2-year Treasury yield plunged from 3.94% to 3.68%. These movements indicate a growing consensus among investors that the Fed will act to stimulate the economy. However, the Fed's decision to hold rates steady since December has been met with pressure from Trump, who has been vocal about his desire for a rate cut. The final decision, however, rests with the 12 members of the Federal Open Market Committee, not just the Fed Chair Jerome Powell. The uncertainty surrounding Trump's tariff policy has cast a shadow over businesses, investors, and the Fed. Companies have been grappling with the unpredictability of tariffs, which have already impacted their operations and planning. Major retailers like Walmart and Procter & Gamble have warned of the negative effects of import taxes on their profits and consumer prices. In early Monday's trading, US benchmark crude oil and Brent crude, the international standard, both experienced a slight decline. The US dollar strengthened against the Japanese yen, while the euro weakened against the dollar. As the world watches and waits, the interconnectedness of global markets and the impact of political decisions on economic stability are more evident than ever. Will the Fed's next move be the catalyst for recovery or a harbinger of further volatility? Only time will tell. Stock market today, August 4, 2025. Dow jumped 600 points. Market rally after last week's drop. In a remarkable turn of events, the stock market experienced a significant rebound on August 4, 2025, with the Dow Jones Industrial Average soaring nearly 600 points, marking a notable recovery from the previous Friday's downturn. This surge in stock prices was not limited to just a few sectors. It was a widespread rally that saw major US indexes climbing by 1% or more, encompassing everything from utility companies to popular meme stocks. The markets faced considerable turbulence late last week, primarily due to President Trump's controversial tariff decisions, a disappointing jobs report, and the unexpected dismissal of the head of the Bureau of Labor Statistics. These developments led investors to increase their expectations that the Federal Reserve might lower interest rates in its upcoming September meeting, a move that could stimulate economic growth. On this particular Monday, the Dow Industrials surged by 585 points, translating to a 1.3% increase, effectively breaking a 5-day streak of losses. Thomas Martin, a senior portfolio manager at Global Investments, expressed surprise at the market's resilience, stating, "I thought we'd get a little bit more of a dip before buyers came in. People are hesitant to wait too long." This sentiment reflects a broader anxiety among investors about missing out on potential gains. In a related development, President Trump announced on Sunday that he would be appointing new successors for BLS Commissioner Erica McIntyre and the departing Federal Reserve Governor Adriana Kugler within the week. The unexpected resignation of Kugler, who was appointed by President Biden, opens up a significant opportunity for Trump to nominate someone aligned with his economic policies to potentially replace Fed Chair Jerome Powell. As the new trade deadline approaches this Thursday, the atmosphere is charged with anticipation for last-minute negotiations between the White House and various countries eager to secure lower tariffs. Switzerland, which recently faced a surprising 39% tariff, has indicated its willingness to present a more appealing trade proposal to the US. Meanwhile, the European Union has announced a 6-month pause on retaliatory tariffs that would have been imposed on the US if an agreement had not been reached. Earnings reports are also in focus this week, with companies like Palantir set to release their results on Monday, followed by McDonald, Disney, and Uber later in the week. As of Friday, approximately 2/3 of SP 500 companies had reported their quarterly earnings, with over 80% exceeding analysts' expectations for earnings per share, according to data from FactSet. In the latest trading session, stocks made impressive gains, with the 3 major indexes recording their largest daily increases since May. The Nasdaq Composite rose by 2%, while the SP 500 climbed 1.5%. This recovery comes after the Dow experienced its worst week since April, highlighting the volatility of the current market environment. Shares of American Eagle Outfitters saw a remarkable 24% increase following President Trump's praise of the retailer's recent advertising campaign, demonstrating how political endorsements can influence market performance. In the bond market, benchmark Treasury yields dipped slightly to 4.197%, with the 2-year Treasury yield falling to 3.680%, after experiencing its most significant 2-day decline since August of the previous year. The US dollar remained relatively stable, although it did strengthen against the Swiss franc. In the commodities market, oil futures experienced a decline amid fluctuating trading conditions. Notably, 8 OPEC+ countries reached an agreement on Sunday to increase oil output starting in September, a decision that aligns with market expectations. For those looking to stay informed about market trends and developments, consider subscribing to our free weekday morning and evening newsletters, which provide valuable insights into the ever-changing financial landscape. US stock market soars. Biggest daily rebound since May. Tesla, Spotify, Dow rally explained. In a remarkable turn of events, US stock indexes experienced their most significant daily percentage gains since May 27, bouncing back from a sell-off that occurred on Friday. This surge was driven by investors eager to find bargains following the previous day's downturn, alongside increasing speculation about a potential interest rate cut in September, spurred by disappointing job data released on Friday. Key highlights: Tesla's stock surge. Shares of Tesla saw a 2.2% increase after the company awarded CEO Elon Musk a staggering 96 million shares, valued at approximately $29 billion. This move has sparked discussions about executive compensation and its implications for shareholder value. Spotify's price increase. Spotify announced plans to raise the price of its premium subscription in select markets starting in September, leading to a 5% jump in its stock price. This decision raises questions about consumer response to price hikes in subscription services. Market performance. The Dow Jones Industrial Average climbed by 585.06 points, or 1.34%, reaching 44,173.64. The SP 500 rose by 91.93 points, or 1.47%, to 6,329.94, while the Nasdaq Composite increased by 403.45 points, or 1.95%, to 21,053.58. Market sentiment. The rebound in stock prices comes after a disappointing report on July's job growth, which was further compounded by significant downward revisions for the previous 2 months. Mike Dixon, head of research and quantitative strategies at Horizon Investments, noted, "Today is just a little bit of dip buying. It does show a pretty healthy sign of folks out there looking for an opportunity to get in." However, he also expressed concern about the labor market's apparent weakness, which contrasts with the optimistic expectations surrounding potential interest rate cuts. Currently, the likelihood of a rate cut in September is estimated at around 84%, with market analysts predicting at least 2 quarter-point reductions by the end of the year. Political developments. Investors are also processing the recent firing of Bureau of Labor Statistics Commissioner Erica McIntyre by President Donald Trump, who accused her of manipulating job data. This controversial move has raised eyebrows and could impact trust in economic reporting. Additionally, Fed Governor Adriana Kugler's unexpected resignation may pave the way for changes in the Federal Reserve's approach to interest rates, as Trump has been advocating for cuts. On the trade front, Trump announced plans to significantly increase tariffs on goods imported from India due to its purchases of Russian oil, prompting New Delhi to respond that such actions are unjustified and that they will take measures to protect their interests. Earnings season. As the second quarter earnings season draws to a close, investors are keenly awaiting reports from major companies, including Walt Disney, which could further influence market dynamics. Notable stock movements. Joby Aviation. Shares surged by 18.8% after the company revealed plans to acquire Blade Air Mobility's passenger business for up to $125 million, indicating strong growth potential in the electric air taxi market. Berkshire Hathaway. In contrast, shares of Warren Buffett's Berkshire Hathaway fell by 2.7%, following a $3.8 billion write-down and a decline in quarterly operating profit, highlighting the challenges even established firms face in the current economic climate. Market trends. Overall, advancing stocks outnumbered decliners by a ratio of 4.48 to 1 on the NYSE, with 136 new highs and 51 new lows recorded. On the Nasdaq, 3,487 stocks rose compared to 1,090 that fell, reflecting a positive sentiment among investors. Trading volume on U.S. exchanges reached 15.05 billion shares, slightly below the 20-day average of 18.37 billion shares. Final thoughts. As we reflect on these developments, it's clear that the market is navigating a complex landscape of economic indicators, corporate actions, and political maneuvers. What are your thoughts on the recent stock market rebound? Do you believe the optimism surrounding potential rate cuts is justified? Or do you think the underlying economic issues will prevail? Share your opinions in the comments below.